Welcome to Take 5 Tax Tips with Kelly. In this video, we're going to talk about how to get yourself set up right from the start, what you need to do with CRA to get your accounts in order, what you need to do when you get to the bank to make sure your corporation has the right accounts that you need, and how to start tracking things so at the end of the year you can have all the tax deductions possible so we can keep your tax bill as low as we can. The first step when you're incorporating is to make sure that you're getting it set up appropriately. When you incorporate, it may seem easy to go ahead and incorporate yourself. However, we do recommend you work with lawyers for various reasons. The number one reason is to make sure that you are setting yourself up for future. And what I mean by that is making sure that you have the ability to bring in future owners if you'd like to, transfer that corporation to someone else, issue multiple share types so you have the ability to pay any of those individuals that are a part of the corporation differently should you want to. If you go ahead and incorporate yourself and you don't factor these things in right from the start, you might have very limited options at a later point in time, and that's not something we want you to have. If you need our assistance with incorporating, we can also be involved in that process for you, whether you be still trying to do it on your own or whether it be you wanting to have a lawyer involved, and we can definitely get into those conversations with that lawyer. The next thing you want to do is make sure that you're set up properly with CRA. CRA should issue you a business number automatically once you incorporate. They usually send this to you via mail. If you haven't seen this shown up within a few weeks, I do suggest you call them at 1-800-959-5525, which is your main business line. You'll get to know that number very well over time. One of the things you'll want to do once you do get that business number is to contact them and make sure that they do set you up with an RC number. Most likely they'll give you that automatically. The RT number is really important and they won't do it automatically. This is your HST number. And you'll want to make sure that you have this number in place before you start charging HST to any of your clients. Then there's two other accounts which are really important to have set up and in place before the end of your year. That is an RP account, which is your payroll account, so we have the ability to issue you some salary out of that corporation, and an RZ account. This is so we have the ability to issue you dividends. Very important things to have in place before the end of the year so we can distribute that income to you in various ways and in most tax efficient ways. The next thing you want to make sure you're doing is getting set up properly at the bank. You're going to want a corporate credit card and a corporate bank account. Not using the same ones that you might have used before if you had a sole proprietor business or one that you might have had in your personal name. It's very important to segregate this for multiple reasons. The first one is you don't want CRA going into your personal business and starting to look at every transaction of every dollar that goes into that company. If it's going through your personal side, your mom gives you a gift for $50, CRA is going to go, well, isn't that income? Shouldn't there have been HST on that? You don't need them doing any of that stuff. If you have it segregated into corporate separate bank accounts, then you're okay. And now you're going to have things where it's only any of the business stuff coming in and out that they're going to see, and it's very clear. Very easy on an audit. You'll have an auditor who's very happy with you, which will make things go a lot smoother for you in the long run. The other thing is it's going to make it a lot easier for you to do your bookkeeping, because bookkeeping is really important to do when you are incorporated to track all of those expenses, because we want to make sure that you have the ability to deduct every possible thing we can when it comes to tax time, so you're not going to have a large tax bill. Instead, we're going to keep it nice and low, and we're going to be able to optimize in the most tax efficient ways possible so you can pay less tax. The other thing that you want to look at when it comes to your expenses is the 3 R's, is what I call it. Think about what it is that you're spending your money on. Was it for the purpose of revenue generation? Do you have a receipt for it? And is it reasonable in nature? These are the 3 R's you want to ask yourself when it comes to any time you're spending any money. And if you can answer yes to these 3 things, definitely keep the receipt, definitely use that corporate bank account or that corporate credit card, because these are deductible expenses for you. The last thing I want to discuss is filing requirements, because the first thing we want to make sure happens is that you are filing on time. So what we want to make sure is you understand what your year end is. This is one of the things you get to pick when you do go ahead and incorporate. And I always recommend to everybody, do not choose a December year end if you can. Possibly avoid that date if you can, because you'll get more of your accountant's time, because most people by default will choose December, and then all their filing requirements all are based on the year end itself. What I suggest you do instead is think about when is your slowest time of the year. because once your year end comes up, this is when you're going to be the busiest to get ready for your accountant. So if, for example, summer is a slow season for you, you might want a June 30th year end. And then your filing requirements are based on that. So your HST return is due 3 months after your year end. So if you were June, that would make it September 30th for you. And your corporate filing deadline for your tax return is 6 months after your year end. So you'll have 6 months for that to be able to do it, and that'll actually be due December 31st if you were a June 30th deadline, for example. Now, one of the things that's also really important to understand is you have installment payments to make, and you want to make sure that you're installing throughout the year. We'll get into that in a separate video as well to make sure you're doing that, but these are the filing deadlines to remember: 3 months after your year end for HST, and it is 6 months after the year end for the corporate filing tax deadline. For more Take 5 tax tips with Kelly, make sure to subscribe to our channel.